Imagine getting paid just for sharing your thoughts on products and services you use every day. With Survey Junkie, it's that simple. Click on the link in the video description to discover how you can start earning today by taking surveys.
The Labour Party has unveiled its manifesto as Sir Keir Starmer hopes the desire for change will convince voters to put him in Downing Street this summer. With the polls showing Labour is very likely to form the next government, taxpayers will be keeping a watchful eye on what the party's pledges mean for their finances. Meanwhile, the Labour Party is very keen not to put off any of those considering voting for it. The Labour leader has promised a tax lock with no increase on rates of income tax, NI, and VAT, while also protecting the triple lock for pensioners. Starmer is also pledging to prioritize economic growth, with the launch of a national wealth fund and new house building targets. We look at what the proposed policies mean for your finances. Labour is promising to turn the page on conservative ideas that have caused the chaos and is prioritizing economic growth and wealth creation. Mr. Starmer told Labour supporters in Manchester that social justice and economic growth must go hand in hand. Figures from the Office for National Statistics released on Wednesday showed the UK economy recorded no growth in April, following growth of 0.4% in March. Starmer said the manifesto is a total rejection of tax and spend, and he would prioritize wealth creation and economic growth. The party's manifesto states that Labour's fiscal rules are non-negotiable and will apply to every decision taken by a Labour government. Its first steps will include delivering economic stability, with tough spending rules to grow the economy and keep taxes low. Its manifesto says, "We will embrace a new approach to economic management, securonomics, that understands sustainable growth relies on a broad base and resilient foundations." Among its plans include a new industrial strategy and a national wealth fund to fund ports and supply factories, new gigafactories, and help rebuild the steel industry. Starmer has been adamant that taxes will not rise under a Labour government, despite plans for significant investment. He has ruled out an increase in income tax, national insurance, and VAT. The Institute for Fiscal Studies warned that this leaves no room based on current forecasts for any more spending than planned by the Conservatives. The IFS added, and those plans do involve cuts both to investment spending and to spending on unprotected public services. But while there is a pledge not to raise tax rates, taxes will rise due to fiscal drag. Labour has previously said that it will go ahead with the Conservatives' planned freeze on income tax thresholds to 2028, which drags more of people's earnings into tax and pushes people into higher tax bands. The IFS estimates that it is equivalent to putting up income tax by 6p. While Labour has promised not to raise tax on working people, there are some key omissions in the manifesto on taxes on wealth. Capital gains tax, inheritance tax, and the pension lifetime allowance were all absent, leaving the door open for the future. The pension lifetime allowance was axed by the Conservatives last year, after successive Tory chancellors had spent years reducing the limit to the point where it started causing problems in public services. Shadow Chancellor Rachel Reeves immediately said she would bring it back, but this week rumors emerged those plans would not be in the manifesto. This Is Money's pension columnist Steve Webb pointed out that not putting it in the manifesto is not the same as a commitment not to bring it back. There was a lack of confirmation in the manifesto that Labour would not raise capital gains tax, which could cause concern among investors. Starmer and Shadow Chancellor Rachel Reeves have said there are no plans to increase CGT rates, but haven't ruled it out. Rachel Griffin, tax and financial planning expert at Quilter, said, "Those who face CGT in the UK, primarily higher-rate taxpayers and entrepreneurs who realize gains from the sale of residential property, investments, and other chargeable assets, have already seen their annual exempt allowance slashed by the current Conservative government to just £3,000 a year. If Labour is to win the election and then increase rates, it would serve as a double whammy with higher rates and lower exempt allowances considerably increasing the capital gains tax take." Meanwhile, inheritance tax has also not had a mention. It is considered